Tuesday, June 4th, market analysis, Stan Ehrlich. Good morning, a little late today. It's 10:21 California time. And we always start out with the indexes and then go to futures and sometimes some other things. We do have what appears to be still a double top formation in most of the stock indexes. This formation is pretty dangerous because if it works correctly, and we're still in the early stages of it, it predicts a significant downside move in, for instance, the E-mini to about 45.82. Now, not particularly fond of saying that, and it's a lot lower than my original expectations, which were 4,900 down to 4,800, which is a significant support area. But that's the way it is. So I have to watch both zones or objectives as the market continues to work lower. And I do expect that, and this is Tuesday, so I think we're going to make new lows before the end of the week. Period. Down a little bit on the day at the moment, not much. The 5-minute E-mini June contract still is kind of forming a little pennant formation in the last day and a half, 2 days, and is going essentially sideways. So I need to have market go below 52.70 and then keep going below 52.60. And finally, if it gets below 52.45, it's probably going to make a new low. Next, Spider. Sell signal on top of the market, like, by the way, the E-mini. We got an ER sell signal on the exact high day. And in fact, a total of 3 signals in a 5-day period. That's a whopper of a group. So I have to say confident, but that doesn't make the trade work. Next, sell signal on top of the Spider, as you should expect. And we're slipping a little on the day, about 2 points lower. Again, I need to see lower lows. I think it's going to happen very soon. The Spider 5-minute chart, same kind of thing, little pennant formation developing, but it's trying to bounce off this support area fairly well in the last few days. So again, I need to get below it and close below it. We only did that, well, actually once a couple of days ago. All right. Bearish sell signal on the top of the QQQ to the exact day. If you are using ER signals, you may still be in a short position. This is a 1 overnight, ER 1 overnight, and a very loose stop, which is the yellow STS dotted line. So if this starts to drop off to new lows, that stop will probably come down to at least around unchanged, locking in no loss, give or take, or a small profit. That's probably what's going to happen. And I do expect that to happen, and I'm crossing my fingers. Next, we've got the QQQ, same strategy on the entry, and we're holding a small profit on the trade, and the stop is here. And if we start to make lower lows, and that stop is not controlled just by price movement, but it's also controlled by another indicator. Next, we've got on the top of the market, the NASDAQ futures contract NQ, sell signal, of course, May 23rd. Today, not much to say, no higher high, no lower low. Market down a little on the day at the moment, but that can change pretty quickly. Next is the NASDAQ 5-minute chart. And you can see that with a very fast moving stop, which is our yellow line, our ER3 overnight position with this particular STS kicker number moved down very nicely, and it's all automated and got us out as so far at a pretty decent price. So that's the end of that trade. But again, it depends upon how you want your stop to move. Of course, there's defaults. Next, YM. We did get, ladies and gentlemen, the sell signal on the top of the Dow Jones YM April 1st. And the buy signal on the exact low day on April 19th. And yes, a new short sell signal May 20th on the high of the rally, the second high on a double top. Both highs on the double top have bearish engulfing ER sell signals. It reminds me of silver last year, which did the exact same thing. two sell signals on the highest high of a double top. That pattern, if I remember correctly, worked extremely well. Next, no implications. The YM, ER1 short overnight. This particular kicker, fantastic, looks great. No other commentary, looking for new lows, everything. The Russell almost has made new lows. Not quite yet, but it's near the low of the day and last. It's not the same kind of chart as the other indexes. The Russell never had a double top or sell signals on its rally highs like the others, all the others. And it only got into a major resistance area, but a whopper. It's a 2-year trading range that has stopped, and actually it's longer than that. If you want to go back to pretty much the beginning, gosh, it's starting in January of 21. After being above that zone, it stopped going down, and finally it broke through it and then stopped going up. And that's exactly what it just did weeks ago when I talked about it being overbought in the resistance. And it's almost another new low. The bond market, interesting. It's breaking through at the moment the resistance area that stopped it once before, a couple of 3 weeks ago at 516. Then we got a sell signal that worked out okay, but it bounced out of oversold conditions and out of a support area a few days ago, and now it's right back up to the same highs. Will it break into new highs and close above previous highs and keep going? We're not overbought quite yet, and there's a chance of that. Otherwise, this is a little bit of a resistance area, and it could stop cold turkey right here, 118.26, give or take a few ticks, and then turn down. Since I'm bearish on the indexes, I'm kind of thinking this is going to turn down. Next, 10-year notes, very much in the same position, at a resistance line, which basically stopped the rally on 516, and there it is again. Not quite as close to the previous high as the bonds are, but in resistance, double top maybe. We'll see what happens. We're not quite overbought, very much like the bonds. Very, very important what happens here in interest rate futures. Crude oil collapsing yesterday, breaking into new low ground, completely wiping out the support. I told you before, triple bottoms are pretty rare, so the likelihood of it actually working, which it looked like it was starting to a few days ago, was unlikely, but crash, it dropped back immediately and now has a major downside breakout yesterday with lots of follow through so far today. I think it's going to go down probably below 68. Next, natural gas, July. Bearish engulfing, not at the top, unfortunately, but they don't always occur at the top. There's another one that worked great, but it wasn't at the highest high. This one looks like it could have been close to the highest high, but whatever. So I don't mind it bouncing back a little bit here. We did get relatively low on the RSI scale, but not my oversold under 25. I think it's going to turn around and start to make new lows. It's already down on the day a chunk and not far from yesterday's lows. So, yep, I think it's going to make new lows and come down to 2.3. What do we got? Heating oil. Major downside breakout in heating oil. Follow through today so far. And I'm looking for a lot lower levels real soon. This huge support area, it's hard to pick an exact spot for stuff to turn around. At the moment, I'm going to leave it at that, but we are in a wide, very wide, too wide of a support zone. So I got to narrow it down, work on this a little bit. We are oversold, so it could start bouncing at any moment. Next, gold, silver, platinum, copper. So gold is trying to make another new low like yesterday. Not quite there yet. I think it's about to, but the double top is the story here. If we start closing below 2309, you got yourself a downside breakout, and then the minimum downside objective will be 2139. Or let's call it 2140. And that is also in a support area. So I think it's headed down there. Next, silver. did make lower lows. Some people would call this a minor double top. I can't disagree. I've seen better. Well, we got a breakout, and it's following through to the downside. So our first support has almost been reached, 29.335. But that doesn't look likely to turn it back up again, in my opinion. I think it's going to be dropping down toward the 27.8 level. Next, we've got a sell signal on the top of the platinum market, and it's working great. Yep, and new low closed by a big chunk today. Downside follow through, love it. Support didn't hold, looked like it might, but the sell signal is now a whopper. It's been about 2 weeks. We are short, give or take, at about 1062, and it's now 999.6. All right, where's it going? Well, to be honest with you, we're almost oversold. So maybe a little bit lower. Can I find some support? Okay, in the gist of 375, 975. That's my first idea. Next, high grade copper. New lows for high grade. Not quite oversold yet. Not quite yet at the first support level, which is 44.4970. And if it gets there, maybe today it could be oversold conditions. So there's a chance that that might turn it, but that's not really very significant. I'm betting on the 4.38 level and this little zone in here for it to turn back up. We got beans, oil, meal, corn, wheat. Double top in beans. I talked to you about this as it happened. And we have a downside breakout yesterday, convincingly. So the minimum objective is 1153, which I've been talking about for a while. And it's on its way there. But today we got oversold. So now it's time for any old kind of a minor bounce of a day or two or three, which I have to say is quite plausible. But my objective remains 1151. Next, we've got the soybean oil, which I've been talking about maybe forming some sort of a gigantic 2-year head and shoulder bottom. Now the dip is getting toward oversold, but not quite, and getting back into the support area. And I'll zoom, so to speak, into that. So we can see that the, let's scale. The low today down here isn't really killing the last shoulder low, which is, of course, around 4250. It's getting a little late, timing-wise. That was pretty good. I don't want any lower lows, or I have to start thinking about no head and shoulder bottom, which would not surprise me, because, again, it formed in the wrong area at the end of a big sideways after going up, trading range, and not at the bottom of a big break, which is usually where head and shoulders form, at bottom of bear markets. Secondly, it's unusually large. Most of these formations are a month or 2 or 3 on the small side, 6 medium, 6 to a year, plus a little on the large size, but not 2 years. 2 wrongs. Okay. What do we got? Meal. Bought the bottom to the exact day, like in beans. This was February 29th, but here's that damn double top. But we have a new bearish engulfing sell signal on the exact day I said it was happening, May 29th. We have new low and a probable new low close. Again, today we're already halfway down to my minimum downside objective, which is in the ballpark of 340. So what can I say? We're on the way. Now, there could very well be a bounce on the way because we're not too far from oversold. Next, corn bought the bottom so far, and that was on February 26th. But, and I really can't call this a double top. It's not really quite close enough. I didn't get any signals up there either. It only hit a resistance level, which was not even that profound to begin with, and just turned around. But the other ones were a clue. Grains, the other grains were a clue that the corn could be doing the same thing, which it has. And now maybe it's going to get down to that 435 support. I hope that stops the decline and turns back up and correlates also with all the other grains. This is oversold for 2 days. That adds to the likelihood of it turning up a little bit more. That's nice. We got the bottom of the market to the exact day in wheat, and that was March 11th. We've had 2 sell signals The first one didn't work very well, but it did work for a couple of days. This sell signal yesterday is now working great immediately. So far, so good. Love what I see here. Too bad the sell signal isn't on the high day, which was overbought, but again, not a bearish engulfing. Next, we've got the cattle. You know, I just don't have a good, strong idea on cattle. Yeah, we have bounced up, we touched some resistance, and we're slipping off, so now it's about unchanged to a hair lower. That's not good. I need to close below 177 to talk about it coming down to 174 and maybe even a little lower than that, which will be the bottom of this gigantic pennant formation, which I am doubting is for real. But so far, you got the 2 points for the bear and the 2 points for the bull lines, and that's a pennant. Hogs, we sold at high day, April 10th. It is now, today, finally fulfilled the downside objective on the head and shoulder top formation, which I've been showing you ever since probably approximately April 23rd. Yeah, it might have been even a day earlier than that. I started talking about a rally high, and the last shoulder was a little too tight. It could have been a day or two later easily, and it's a little higher than I thought it would be. I thought it would probably be a little lower, but nevertheless, body parts are there, and it's history. The whole thing has worked. End of story. Nice way to end the charts. Yep. And I'm done for today. Market analysis, Stan Ehrlich, thank you very much.